What's up, everybody? Welcome back to Investor Central Club. I'm your host, Max Pitts, and today we have another breakdown with our recent acquisition where some of these features will be baked into the Investor Central Club platform. And this is the volume profile. And no, I'm not talking about the next overpriced dating app like Tinder or Bumble. It's one of the most powerful trading tools you've probably ignored because you were too busy YOLOing Tesla calls. But this right here is where the big boys, and we're talking institutions, hedge funds, your ex's stepdad with insider connections, actually show their hands. And if you're not watching it, you're basically blindfolded in the casino. So you see this chart here. We're going to use SPY as our example today. It doesn't look like your normal candlestick chart. It's sideways. Instead of time, it shows how much trading volume happened at each price level. Think of it like an election map. Instead of red versus blue states, you've got buy orders versus sell orders stacked like political propaganda. Except these votes actually matter. The fat chunks, that's where traders can't stop swiping right. Price keeps coming back there because that's where the market agrees fair value lives. Skinny parts, that's your no man's land. Price doesn't want to hang out there. It's the Tinder profile with no bio or profile pictures. So our thick boys here we're sitting at in these candles up here. And then when we hover over them, we can see 635.50, 635.60, all the way up to 635.90, and 636 is where we see some tapering off down here, but some more volume coming back at 636.30. And our skinnies would be considered 634.70, 634.90, 636.50. You get the point, right? So you see that giant chunk at 636, as we mentioned earlier. Yeah, that's called the point of control, or POC for short. And no, that doesn't mean people of color. Not the political committee, the point of control. That's where the most volume has traded for today. Translation, this is Wall Street's comfort zone. If price drifts too far away, it's like when you leave your couch. Eventually, you're going to crawl back. The green and red bar clusters are certain zone. That's your value area. It's where 70% of all trades are happening. It's like the high school cafeteria. Everyone's in there gossiping, fighting, and trading. If price breaks out of the value area, that's when things get fun. You either are going to see a trend explode or a fake out that slaps you harder than buying AMC in 2022. Here's how you use it like a pro. One, identify the point of control. That's your magnet. So our point of control in this case would be between 635.50 and 636. So that would be our point of control that we're looking for, either a break below 635.50 for some more downwards momentum, or if we wanted to see a bullish continuation, we'd look for something above 636 breaking. And when we did see 636 break on SPY today, we did see a upward move. So that's another thing to identify. Number two, spot low volume nodes. These are thin areas. If price enters them, it slices through like butter. No one wants to trade there, so it's going to move fast. So like, think of these as like, if we get down to 635, we're going to see a move in either direction quickly because we don't see a ton of volume in these areas, right? So realistically, the magnet would be back to these 635 levels unless we see no buyers really step in at these price points. And then use volume shelves as support and resistance. When you see a fat shelf of volume, that's a battlefield. If buyers win, price bounces. If sellers win, it's going to collapse. So in this case, it would be if buyers won here, which they ended up doing, we would see a continuation upward. If we saw sellers win, then we would see that continuation down to 634. And yet, most retail traders, they ignore this for some reason. They'd rather stare at RSI like it's a crystal ball or ask ChatGPT if AMC is going to the moon. But the pros, they're watching this volume profile like it's the last season of Succession. And you should too, because guess what? The price moves because of volume, not because your buddy on Reddit said, it looks bullish. So next time you're trading SPY, NVIDIA, Tesla, or zero day trading anything and wondering why your puts look like toilet paper, pull up volume profile. This thing shows you where the market actually cares. And if you don't use it, well, don't cry when Wall Street dunks on you. That's it for today. Subscribe, like, drop a comment if you actually learned something. And remember, in trading, volume is truth and price is just the gossip. I'll see you guys tomorrow morning.